So if you want to buy my gold, you want to collateralize my gold, you want to create new products on top of these gold, you can have now new denomination. Now, of course, it doesn't make sense to have this new denomination to happen entirely in the traditional RMB sense, right? So this is really where the digital RMB, the digital yuan, the offshore RMB in digital form could become very interesting.
This is Money Never Sleeps. Sharp riffs, big ideas, and real insights from smart people. I'm Pete Townsend. Let's go.
Money never sleeps, pal.
So joining me today is Sean Lee. Sean is deeply involved in stablecoins and on-chain finance across Asia and the Middle East. He's a senior advisor to the Crypto Council for Innovation. He's a Techstars mentor. He was previously CEO of the Algorand Foundation. Sean, you've been with me before on this show, so thank you. And it's great to have you back.
Thank you for inviting me.
So Sean, just to dive right in, you were in meetings with the People's Bank of China last week, the PBOC. You made a comment to me afterwards that really stuck. You said that after those meetings, that China is not dabbling with a digital yuan. They're serious about developing the ecosystem, both for RMB internationalization, the renminbi, and in response to trade conflicts. What did you actually see that led you to this conclusion?
So China has been developing their CBDC, that central bank digital currency, for a number of years. And most of those experimentation as well as actual activation have been onshore. And what that means is it's been used inside of China. And there's been billions of transactions going through the system already. And that's in China, it's called the ECNY. So in my conversation last week with the PBOC, what was very interesting is that they are now starting to look at the digital currency, the digital yuan, as a vehicle for offshore settlement and offshore transactions. So given the digital rails that these currencies are running on, and the fact that the offshore RMB potentially will be going on the digital rail as well, have tremendous implications from a trade finance, cross-border settlement, and more importantly, in today's world, geopolitical tensions and everything else, there's going to be quite a bit of trade flow that could be running on these rails. And I think that's the reason why the meeting with PBOC and was with the research institute, so it wasn't directly with the central bank, but the research is very much around how does this work in the international markets and how could it interoperate with other forms of digital currencies, including licensed stablecoins and potentially bank deposit tokens.
It sounds like with these little breadcrumbs that you're dropping here, Sean, that this is less about currency itself and more about infrastructure, and that where the geopolitical situation in the world right now, trust is fragmenting, trade is fragmenting, 85% of the world's commercial activity at the B2B level, I think is the figure, is denominated in USD. China is stepping into this and has been for a couple decades now, and that it seems to be that China is focusing less on persuasion and more on building optionality into how money moves, not just for themselves, but for any of their trading partners.
But I think the key message there is they are not asking their trading partners to choose one or the other. I think the message is they realize that all the sovereigns require optionality. All the sovereigns want to protect their own sovereign currency. So it's more around leveraging this new form of infrastructure to still be respectful to different forms of currencies and different formats of currencies and ensure that trade flow doesn't stop. So how do you use technology? How do you make it continue to comply and ensure that the trade flows and the existing system can still function? Very important. Lots of discussion around these areas.
With that, the primary objective here, obviously growing RMB usage globally could be one of them. Maintaining control can be a second one.
Absolutely.
Or building geopolitical optionality. How do you prioritize all those?
I will actually give you a fourth. The fourth is that you either force someone to use it or you give them an alternative, but there has to be enough incentive to use that alternative. And that incentive could be in the form of, monetary incentives, or it could also be in the form of a unique product and services that you can offer thereby either making life easier, cheaper, faster, whatever it is, that allows them to actually willingly choose it. And the reason I'm bringing that up is the last couple of days in Hong Kong here was the Asian Financial Forum. So that's the annual big financial conference where all the policymakers from Central Asia, from the ASEAN countries, and abroad as well, come here and talk about trade and lots of MOUs and lots of agreements. One key one that was announced was the setting up of the Hong Kong's gold exchange. Now, gold, to those of us that are in the digital asset industry, have always been like, that's OG gold, right? We're focusing on digital gold, right? Bitcoin and all of these. About 60% of physical gold demand come from Asia. And out of those 60%, predominantly, they come from both India and China. And that's cultural, right? When we have weddings, the bride usually is wearing head to toe, like in gold, right? And it's gold something. So there's a lot of physical demand. And obviously, given the history over the last 100 years with all the wars and everything else, anytime there's uncertainty, gold becomes the number one thing. So there's been a lot of demand. China has been building a very robust gold infrastructure. So Hong Kong setting up as a gold trading hub in supporting road to New York and London becomes quite interesting because now you've got an Asian time zone. And also the demand is actually coming in here. Now, the reason I'm bringing this up is there's a lot of subtle messages when these announcements are coming out in terms of potentially getting access to these physical gold that have full redemption capability to be denominated in RMB. So if you want to buy my gold, you want to collateralize my gold, you want to create new products on top of these gold, you can have now new denomination. Now, of course, it doesn't make sense to have this new denomination to happen entirely in the traditional RMB sense, right? So this is really where the digital RMB, the digital Yuan, the offshore RMB in digital form could become very interesting. Right? Very interesting. So now you're tying a very large economy, second largest in the world, doing lots of trade with Africa, with ASEAN, with Latin America, and at the same time with this physical demand of gold, OG gold, continuing to go up with potentially no end in sight, at least for the next little while until the uncertainty subsides, then all of this setup and the advent of what they're trying to do and also what PBOC is trying to research, I may be a guessing man, but I'm pulling all of these threads together. I'm like, ooh, that is a very interesting play.
You have a way of putting chills down my spine, Sean, when we speak. And I think that's just about how deep we are into the space that happens, is that there's the geopolitical optionality here that's driving some of this, but there's the new. And the big opportunity with moving assets on chain is new products. Mm-hmm. And the mix of these two catalysts here are going to create some very, as you said, interesting opportunities here for not only sovereigns, but corporates, as well as startups and those in the middle of all these flows.
So Pete, maybe I'll add one more thing on top of that. That's really going to take this conversation to the next level. So we've been talking about stablecoin from a fiat reference perspective, right? So a US dollar stablecoin being backed by US dollar assets and so on and so forth. Obviously, there has been attempts to do gold-backed stablecoin, Bitcoin-backed stablecoin, and so on and so forth. With the momentum of gold being where it is today, that conversation all of a sudden have much more meaning towards what it is, right? If you have a stablecoin that is backed by physical gold with full redemption capability, and given the nature of gold itself, that form of stablecoin becomes quite interesting. Who's to say that the collateralization of the gold product wouldn't become a thing? So now this is really where the product, like you add another layer on top, that really creates a new economy based on everything that we know, but in completely different format.
This brings to mind what's going on in the US right now. We're seeing more and more utilities that are being built that are allowing stablecoins to be spent. And then tokenized deposits have come along in the last year or so. And some of that rhetoric is around, well, do we need both? And I think we do. And it sounds like this story that's coming out of China is reflective of that story that's in the US. If we have founders working on building these from both angles, from the Asian infrastructure and the US infrastructure, we're going to end up with some pretty interesting innovations when the two meet in the middle.
I think you're already seeing a lot of innovation and also convergence on that front. Just recently, it was announced that the digital yuan natively will be paying yield. What
Yeah.
does that resonate, right? Towards something that we're familiar with, yield-bearing stablecoins, right? And
Oh, yeah.
it's still being debated as part of the legislation in the US and elsewhere, but it's becoming quite interesting. If you have a form of digital currency, whether CBDC or not, that is natively paying yield, again, incentive, right? I talk about incentives.
It is.
You want people to use it. What is that incentive, right? And that the incentive that is both recognized by retail and more importantly, recognized by the institutions. I get this question asked a lot as well, right? Is it stablecoin versus tokenized deposit versus CBDC? I think all three have their own place to play. They all serve different purposes. In some use cases, they overlap. In most, they just don't.
So many different opportunities to build upon these stacks that started with the Bitcoin white paper, 17 years ago? Okay. And looking at it from that angle of the origin points, those that are a lot closer to the origin points now are the founders. So for those founders who are building in payments, stable coins, or on-chain finance in general, what do you think they should be paying attention to over the next 1 to 2 years as a result of all of this?
Well, first of all, to those that are listening, perhaps they can look at the project I'm working on, which is called OSN, Open Stable Network. And we are building infrastructure to solve part of what we just talked about. So that's one, a little self-promotion there. The word interoperability in the past, in the blockchain space, have meant mostly around cross-chain, cross-protocol. How do you bring one asset to another and make sure they interoperate, smart contract from one to another? I think that word has very different meaning now, given these different forms of digital currency, as well as different considerations from a compliance and regulatory side that you need to put into attention. So that word actually has a much more multidimensional meaning. And any innovators that are looking at that space and looking at real world trade flow and be able to build facilitation technologies or orchestration technologies to bring that interoperability to the next level, I think those technologies and those capabilities are sorely needed.
Definitely. So many opportunities here. And this, as we've been talking about, this is not about replacing the dollar. This is about giving everyone at all different layers of the stack, from institutions to individuals to B2B, giving them options and giving the sovereigns options as well. And that these infrastructure choices really do matter, right? So, Sean, what is the best way for people to find out more about you and what you're building?
They can follow me either on X, that's crypto Sean Lee, SEANLEE, or they can find me on LinkedIn. I do a lot of posting there. I also do have a Forbes column where I write regularly around digital asset policies and innovation. So follow me on there as well.
Wonderful. Thank you so much, Sean. You've added a ton more momentum to my investment thesis, as it was anyway, right? So really appreciate you coming back to do this with me.
Thank you, Pete. Good to be on the show.
Money never sleeps, pal.